Well, welcome everybody. We're back on. I think we've gotten a couple more people, but I think it's probably good to go ahead and get started. Again, my name is Scott Bates. I'm a partner with Cornwell Jackson. We're a top accounting firm located in the Dallas-Fort Worth area. So in order to help our clients through the ongoing increased regulations related to ACA compliance, we have invited Sharon Alt to speak to you today to address some important ACA reporting topics. Sharon Alt is the Director of Compliance at Brinson Benefits and holds 20-plus years of experience in employee benefits, tax compliance, healthcare consumerism, and legislative issues. She is a recognized leader in the employee benefits industry and a frequent speaker at HR and insurance conferences nationwide. Today, Sharon will be speaking on the Affordable Care Act and employer reporting requirements. Welcome, Sharon.
Thank you, Scott, and thank you and welcome everybody. You know, when we schedule this webinar, I don't think any of us realize what a historic day it is. So I actually think it's pretty cool that November 8th, 2016 will be remembered in history as the day that Brinson Benefits and Cornwell Jackson did a joint ACA reporting webinar. Actually, all kidding aside, we do recognize that it is Election Day, and so we want to be respectful of your time and especially thankful for all of you that took time out of your day to join us for this webinar. And thank you again, Scott, for inviting me to speak. So again, my name is Sharon Alt. I'm the Director of Compliance with Brinson Benefits. And what we're going to be speaking about today is the Affordable Care Act's employer reporting requirements under Section 6055 and 6056. Now for questions and answers, a couple of housekeeping things here. I don't think I'm going to have time to answer questions live on the webinar, but my information, my email address, and direct phone number are at the end of the presentation. You're welcome to give me a call. You're welcome to send me an email. I can answer directly. Or if you want, you can go through the chat bar or Q&A on your webinar screen. Send me all of your questions, and in the next day or two, we're going to send back to you the complete Q&A, a copy of the presentation. This presentation is being recorded, so if you would like to listen to this again, you're more than welcome to do so. And then we have a complimentary white paper that we put together jointly with Cornwell Jackson that will be sent to you as well. So without further ado, let's go ahead and get started. Just a little bit about who we are. Brinson Benefits is an employee benefits advisory and patient advocacy firm. We have offices in Dallas, Fort Worth, and Austin. We are benefit strategists here, provide a full spectrum of employee benefit services relevant to mid-market companies looking to improve performance in the area of cost management, compliance, advocacy, communication, operational efficiencies, and health management. A lot of big words there, but we do a lot. We work well with clients. We like to work with clients in helping them put together a benefit strategy. And I know that Chris Leverett is one of our benefit strategists who's been working closely with Scott. So I went ahead and put his information there, so if you would like to call him directly, Chris Leverett, there's his phone number and his email address. All right, so I did this presentation last year, and hopefully this is not relevant for this year, but I went ahead and put it in there. My guess is that the majority of you, because this is the second year, 2015 was the first year we reported on, now we're into our second year of reporting, so hopefully we're not still sitting around the table with our fingers in our ears saying, la, 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 we hope this goes away. And it being Election Day, I think regardless of what happens tonight, tomorrow morning, who's our president tomorrow morning, this is not going to go away anytime soon. So we're going to have to deal with it for a good bit of time here. Okay, and here's my disclaimer. The law, as I'm sure you are aware, is complicated. It's incredibly complicated. It gets more complicated by the day. And we have all kinds of different employers on the phone, whether you're fully insured, self-funded, a smaller employer, an applicable large employer. It affects every employer in different ways. So this presentation reflects our understanding of the available guidance as of today and is subject to change and may quite frankly be changing as we speak. It is not intended to provide legal or tax advice, rather just some general guidance. Okay, so ACA steps in action. What do you as an employer need to do? The first step is to provide that affordable, and we'll talk about what affordable means. You have 3 different safe harbors for affordability. You can use the rate of pay affordability, federal poverty level affordability, or the W-2. but the IRS says you have 3 different ways of making your plans affordable to your individuals. You also have to provide coverage that meets minimum value and minimum essential coverage. Your second step, and hopefully everybody has been doing this, this has been around for a couple of years now, so most employers are familiar with determining who their full-time employees are. You know, in order to be an applicable large employer, you have to have 50 full-time or full-time equivalent individuals. So you probably know by now if you have 30 part-time people, each one of those part-time people counts as a fraction of a full-time individual. So all total, if you're over 50, you are an applicable large employer and therefore subject to the reporting requirements. So once you have provided everything that the Affordable Care Act says you need to provide in terms of minimum essential coverage, minimum value, affordability, and you determine who are your full-time employees, then all you have to do is complete the employer reporting requirements. Sounds pretty simple, right? Okay, so here's what we're going to cover today. We'll cover what is the requirement of the ACA reporting, why, this is a question I get asked frequently, why do we have to do this, why must we file? Who must file as an employer? What forms does each employer type need to file? When are the forms due? Some things changed from last year to this year. There's not a whole lot of transition relief out there. We don't see a whole lot of it, employers that are utilizing it, but there is a little bit left for the 2016 reporting year. And we'll review, this is a big one, we'll review some of the things that we learned in 2015. If this is your second year of doing the reporting, I know that I learned a lot last year. You probably learned a lot last year as well. So hopefully we can take some of those lessons learned from 2015 into 2016. And then we'll talk about some of the key changes for 2016 that are impacting you as an employer. What are the penalties? The penalties have changed a little bit. And then also communication. How do you communicate this to your individuals? It's my guess, and I would love some feedback if you all would like to email me after the presentation, some of your feedback with the 2015 reporting and how you communicated to individuals. We have some great communication pieces that we provide for our clients in terms of what is this 1095-C that you're going to get in the mail? What do you need to do with it? My guess is probably 80% of them went in the trash can last year, and then so when someone figured out that they needed it, they came back to HR and said, how do I get a copy of that form? So communication on the front end is always good to make sure that everybody is prepared for what is going to be arriving in the mail. So you might want to get out your notepads and your pen, take a few notes during the presentation. Okay, what is the requirement? I often get the question, especially if it's not so much this year but a lot last year, what are these forms 6055 and 6056 that I have to file? Well, those are not the forms themselves. These are 2 new sections of the tax code that came in with the Affordable Care Act, which was implemented, of course, back in 2010, phasing in a little bit at a time. 6055 is basically speaks to the individual mandate. And the government now requires that you as an individual have yourself covered under health insurance, you and your dependents. Section 6056 applies to the applicable large employer, that play or pay rule. So the IRS has mandates on the employer, what kind of coverage they need to ask. They need to offer what kind of coverage, how can it be affordable, what's in that coverage. And if they don't play, then there are penalties and fines that go along with that. So the 2 sections of the tax code, 6055 and 6056, are just there to spell out the mandate itself, the reporting requirements, the penalties, etc. So why must we file? Well, as you know, they implemented all of these rules that we just talked about, all of these mandates. So how is the IRS going to know if you're doing it or not? I get that question quite a bit. How are they going to know if we're offering minimum essential coverage, or especially with individuals? Now I didn't have health insurance, but how in the world is the IRS ever going to know? Well, these forms that we're filing is how they're going to know. So in order for the Internal Revenue Service to verify that, number one, individuals, that's you and me personally, have the required minimum essential coverage, that's going to be part of that 1095-C form. And just for your purposes, the 2016 penalty for no coverage is $695 or 2.5% of total household income, whichever is greater. Now, I had a friend of mine call me the other day, and she said, you know, me and my daughter are covered under my group health plan here. My husband lost his job. He's not been covered 3 or 4 months out of this year. Well, I think it was about total. So when it gets to that $695 or 2.5% of total household income, she said, now, because he's the only one not covered, that's going to be based just on his income, correct? And I said, actually, that's incorrect. It's the total household income, whichever is greater. So the penalties are going to continue to increase every year. The government, at least at this point, at least today, November 8th, really wants you to have health insurance. And the penalties and fines will come into play if you can't prove that you do. And this is the form that's going to be produced, which you can use to prepare your taxes. They also want to know if individuals, I'm sure you're aware of the exchange and subsidies that are available in the exchange, on the exchange for those premiums. So individuals that go to the exchange, get their coverage there, and they get a subsidy, the IRS wants to make sure that they were entitled to that subsidy. In other words, this form is also going to tell them if an individual worked for an employer that offered minimum essential coverage, it was affordable, it met minimum value, they simply waived that coverage and went to the exchange and received a subsidy. A lot of people did this. You saw a lot of those forms come out this year. I'm sure some of you got a few of them. So-and-so, one of your employees went to the exchange and received a subsidy. Do you want to file an appeal? Some did, some did not. But this is what the type of information that they're looking for, because they did not, we all thought what they were going to do was make sure that someone was eligible for a premium subsidy before they received it. That's not exactly what happened. People got those subsidies, and now they're trying to verify on the back end, were they really entitled to that subsidy? And then finally, as an applicable large employer, you are subject to those pay or pay rules. Here's all the rules you have to do. You want to make sure that you as an employer are meeting your shared responsibility. Okay, so that's the why. Now, who is required to file? It sounds pretty simple on the onset, but it can get just a little bit tricky. Applicable large employers, full-time employees, including your full-time equivalents. That's pretty easy. All self-funded groups, regardless of size, have a reporting obligation. And last year we had several groups. I did the reporting for probably a little over 50 of our clients last year. We filed right around 10,000 1095Cs. And we had several groups that were caught off guard that would call and say, hey, I'm reading something somewhere that I'm self-funded, I have a reporting requirement, because it got stuck in a lot of people's heads that they had to be over 50, had to be an applicable large employer. If you have 10 people and you are self-funded, and that includes level funding, you do have a reporting obligation. So make sure you're aware of that. Here's another one that caught a few groups off guard. Any employer that is part of any controlled group that either combined or separate is an applicable large employer. Now, each group will file their own authoritative transmittal. We'll talk about what that is in just a few minutes. But if you have 10 employees in your group and you're thinking this reporting doesn't apply to me, good thing our parent company, they have to do all that, but we don't. If there's common ownership and you are a controlled group, and if you question whether or not you are a controlled group, that's when I would refer you back to Cornwell-Jackson to make those determinations, because sometimes it's not always easy to understand, am I part of the control group? If the answer is yes, you have a reporting obligation just like the parent company. Or let's say there's 2 companies, 3 companies, all common ownership. One has 20 people, the other has 20 people, and the third one has 10 full-time employees. Together, you are 50. That means each group has a reporting requirement with a separate authoritative transmittal. But the way that will be reported is you'll be reporting each separate employer, each affiliated employer's name and EIN on your own authoritative transmittal. Just make sure that you're looking at that. Look at those control group rules. Pardon me here while I take a sip of tea. Thank you for your patience. Okay, what forms are required to be filed? Well, it's different for every group, every type of group. So if you're fully insured and you have under 50 full-time and full-time equivalent individuals, then you do nothing. Your carrier is going to file those forms on your behalf. Now, if you're less than 50 full-time employees, remember I just said this, and you're self-insured, you do have a reporting obligation. You will be reporting on Forms 1094B, that would be the employer transmittal, and the 1095B, which is the individual information statement. Now, if you're 50 plus full-time employees, full-time equivalent, and you're fully insured, then you're going to be reporting on 1094C and 1095C. Now, everybody got a little bit confused last year. I know my groups did, because when we started, we were going through the process of creating the forms, gathering the data, which I'll talk more about in a minute. Very, very important what your data looks like. And the carriers started sending out forms. I got a lot of phone calls with, hey, if the carrier was going to send out this form, why did we as an employer need to send out forms at all? Where is our reporting obligation? They're going to get 2 forms. And yes, I understand it's going to be confusing, but what the carrier is sending out is simply going to tell them what months of the year they had coverage. It's not going to report any information as far as what you as an employer were required to do to fulfill your pay obligations. So they will get 2 different forms, and by the way, those forms do not need to be sent in with their tax returns. They're for information purposes only. So they're for their own personal files. Okay? And now if you're 50 plus full-time equivalent and you're self-insured, you're also going to report on the 1094C employer transmittal and the 1095C individual information statement. You've just got some additional information that you need to report, but it's all in the same form. Okay. So this 1095C employee statement. This is the new, well, I guess it's not brand new. We're in the 2nd year now. It's a tax document that the employer issues to the employee and also files with the IRS. This is a form that's going to summarize details of the coverage that was offered by the employer and the status of the employer's offer of coverage to the employee by month for the calendar year 2016. We're always reporting on a calendar year, regardless of what your plan year is. And keep in mind also, you might want to make a note here that if you're questioning if you are not an applicable large employer, that determination is made on the prior year. So if you're thinking, do I have a reporting obligation for this year? You're not looking at whether you had 50 full-time and full-time equivalent employees in 2016. You would look back to 2015. In 2015, well, yes, we had 51 full-time equivalent employees. That triggers a reporting requirement for the 2016 calendar year that will be reported in 2017. I know they don't want to confuse this at all, right? Okay, so this form is issued only to employees that were full-time for 1 or more months in the 2016 calendar year, but keep in mind, if you're self-insured, if you offer coverage to part-time employees, retirees, COBRA participants, any of those that were covered by a self-insured plan, you have to report on them also. You're also reporting any dependent information if you're self-insured. Fully insured, the carrier is going to do that. Self-insured, you have to report on all the months that the dependents were covered as well as the individual. And of course, this document is unique to each individual, just like the W-2. Okay, so in taking a look at the actual form, I did a couple of examples here for you. And in this example, I gave you an easy one and one that's just a little bit more difficult. So you can understand, number one, how important, how absolutely critical your data is. Because if your data isn't good, these forms are not going to be good either. And also keep in mind, we have no good faith effort this year. Last year was kind of, hey, do the best you can. We understand that this is confusing to the software providers, to the employers. It's confusing to everybody. So we got some wiggle room there with good faith effort. We don't have that this year. These forms need to be correct this year. So you should have already been tracking your data this year, but hopefully, if not, that's something you can start doing quickly because we also have a very short time to get these filed this year. Now, so this is an example of a fairly simple form. This is an individual's date of hire was 10/1/2015. Eligibility was the first of the month after 60-day waiting period, which remember ACA rules it cannot be any longer than 90 days now. Can't be first of the month after 90 days. 90 days period. So first of the month after 60 days is pretty standard right now. The employee-only lowest monthly cost share meets federal poverty level. So that's the easiest one to go by, a qualifying offer. And for this year, it has been increased to 9.66%, so that's $95.63. Now, this is me. I use myself as an example. So on Part 1 is fairly simple, employee name, social security number. Also keep in mind that the forms that you're sending out, the individual information statements that go to the individuals, you can truncate that social security number on that form, but when you file these 1095Cs with the cover sheet, if you will, of the 1094C, the transmittal, you have to have the full social security number. So we had a few groups look at that last year, really not comfortable with sending out social security numbers in the mail, where you could truncate them, but we're going to have to reproduce them for what goes to the IRS versus what gets mailed out to the individual. But you can do it. Address, zip code, second part over there, Part 1, your employer's information, employer name, employer identification number. Here's something else, a little note from last year that I learned. Make sure that if you are a part of a control group, that your name, employer name, and employer identification number match. I think I had 3 or 4 groups last year that were a DBA. So when we filed with the IRS, the entire submission was rejected. So what you don't want to do is file this with the IRS, mail out your 1095C, spend the money on the e-filing, spend the money on printing and mailing of the forms, and find out you have to reproduce all of the forms again. So you want to make sure employer name, employer identification number match. That's something you may want to check with your CPA to make sure that you're on track with that. Address, telephone number, plan start month right there at the beginning of Part 2. We still don't have to enter that yet, 2018. When we file for 2017, you won't need to do that. I'm not sure what the big deal is. That's a 30-second fill in the blanks there, but they've given us some leeway on that. We have 1 more year. Okay, so looking at Part 2, this is the nitty-gritty of the form here. This is what the IRS wants to see. And I've given you a list of the codes further down in the presentation so you can go back and look. But 1A, see, I was hired in 10/1/2015, so I was covered all of 2016. So I can use box 14 there is the offer of coverage. What did you as an employer offer me? And 16 is what did I take? So 1A is a qualifying offer. That means you offered me coverage, you met all of the mandates. It met minimum essential coverage, it was minimum value, and it was affordable to me at the federal poverty level because it's less than, see, that 95.63. Okay, so $90 a month. So for all 12 months, my employer offered me coverage that had all the goodies in it that the IRS says it needs to have, and line 16 tells the IRS under Code 2C that I took that coverage. I was enrolled in that coverage for all 12 months. So fairly simple. Part 3, you're only going to fill out the Part 3 if you're self-insured. If you're fully insured, Parts 1 and Part 2, and then you're done, unless, of course, you're part of an aggregated group. But something else that confused a lot of people last year, we got a lot of calls on, is down on the bottom, Part 3, covered individuals. Sharon Alt and my Social Security number would show up in line 16, and then my dependents underneath that. And is that correct? The answer is yes. A lot of people thought, well, that's duplicate information. It's not. It's supposed to be in both places. And then, of course, over to the side there, you see under Part 3, D, covered all 12 months, is checked. Okay? Now, this one's a little bit different. This is where you really get into decoding and what your data looks like. Data matters. Little bit of a different situation. Employee date of hire is 8/20/2016, so hired later in 2016. Same eligibility, first of month after 60 days. My employee-only lowest cost monthly premium is at the federal poverty level, so all is the same there. The only difference is my date of hire. So again, part one, employee information, employer information. Make sure you're checking employer identification numbers. You also want to make sure that your Social Security numbers, I talk about this a little bit later in the presentation, but it's worth noting now that out of 10,000 forms that I filed last year, I got just about 1,000 of them rejected because the Social Security number and the name of the individual did not match. The ACA system is not, there's really not a nice way of saying this, it's just not as smart as the IRS system where you have been submitting your W-2s for many, many years. I had so many calls with people that why would this get rejected? This person has worked here for 20 years. We've never had an issue with the Social Security number not matching the name. It's not smart enough. The AIR system is not smart enough or stringent enough to reach out and match that with a junior, or maybe someone's using their middle name. Maybe someone got married and they didn't change their name. I had one just the other day that it was rejected, or a little bit farther back in the year. It was rejected, and she called and said, well, there's just no way. These two people have been married for 20 years. Names are the same. Social Security numbers are correct. And I said, well, the IRS requires that you go back and bring this to the attention of the individual. Something's not matching. And the cool thing is that the IRS didn't even tell you what didn't match. So you didn't know if it was the individual's information that was incorrect or maybe one of their dependents' information was incorrect. She went back and checked with the both of them and called me back and said, well, wouldn't you know it? They're not married. I've known them for 20 years, thought they were married. And I said, okay, so that's it. She's got a different last name with the Social Security Administration office. So this AIR system, and the AIR system is where you're e-filing all of the forms when you're ready to go. It's a lot more stringent. So you've got to be careful in making sure that names, Social Security numbers match. Okay, so let's take a look at part two. Now this one, because it's a little different because my hire date is later in the year, if you look at the top, January through October is a code 1H. That's no offer of coverage by my employer. Now if you look down at line 16, I'm a 2A from January through August. 2A means I didn't work there. So it makes sense that line 14 would be 1H. It'd be great if Brinson would have offered me coverage while I didn't work here, but they didn't. So these make sense. They coincide. Now when you get to September and October, I'm a 2D. That means I'm in a limited assessment waiting period. It's correct. The employer is still 1H because they're still not offering me coverage. I'm still in my waiting period. And then if you look at November and December when I picked up coverage, I go to a 1A. That means the employer offered me qualified coverage. And 2C means I picked up that coverage. So when I use this to file my tax return at the end of the year, I'm not sending it in, but it's my information state. This tells the IRS that I did not have coverage. Now, you don't know. I may have had coverage somewhere else. I'm not telling. But this form here from my employer says that I did not have coverage with Brinson Benefits all the way until November and December of last year. And then again, if you look down at Part 3, again, you're only completing this part if you're self-insured, but only November and December are checked for this year. You can't do the covered all 12 months. Okay? Okay, so the 1094-C, which is the employer transmittal. This is the form that's going to sum up the information from the individual 1095-C forms. It's much like a W-3 is the transmittal of all of the employer's Form W-2s. It's kind of a cover sheet. It also provides employer-specific details such as the number of full-time employees and total employees per month, and also whether the employer is eligible for other relief criteria, other transition relief, which is for the most part gone for this year, but we'll talk about it. Okay, so here's the 1094-C. At the top, you have the employer information, your ALE information, name, employer identification number, address, contact phone number. They want a contact name, someone that they can call if they have questions about this 1094-C. And in line 18, total number of forms, 1095-Cs, transmitted with this transmittal, 85. Is this an authoritative transmittal? Yes, it's an authoritative transmittal. Let me go back just one. Is this an authoritative transmittal for this ALE member? If yes, check the box, and if no, see further instructions. So Part 2, total number of forms 1095-C filed and or on behalf of the ALE member, 85, and then 21 is ALE member, a member of an aggregated ALE group. I answered no, but if you answered yes, then you would have to complete Part 4. I'll talk about Part 4 in just a minute. On Part 3 here, you're checking these boxes. I can check the box, yes, I was covered. The employer offered minimum essential coverage for all 12 months. B and C seemed to throw people off a little bit last year. B is going to be all of your full-time individuals, full-time and full-time equivalent individuals for that month. And you as an employer need to pick a day of the month that you want to grab that number from and be consistent with it. Column C is the total employee count. So you see the difference there. This employer could have had 50 full-time equivalent individuals, but they also had some part-time people, some people that were in their waiting period. So the IRS wants to know the difference. Basically, they want to know how many were you required to offer coverage to and how many total do you have. So that's the difference in those two numbers there. And then Part 4, if you are part of a control group, all you have to do is put the name of the control group and their EIN, and you're done. You may or may not be doing reporting. I always suggest to employers if they're, number one, identify if you are part of a control group, and then number two, have a team meeting and figure out who's going to do this reporting. Most of the time it's the parent company, but we had several groups last year that parent companies said, yes, we're taking care of our own reporting, but you're not, we don't even know who you people are. We've never seen you before. We just know that we're affiliated by tax ID number, so take care of your own reporting. The key here is to make sure that somebody is taking care of the reporting if you are part of that control group. Okay, where does this data come from? All this data that goes onto those forms. The system that we use is called HCM file, and it's a system that's driven by dates. But there are all kinds of different systems out there. You may have done the reporting for yourself internally last year. You might have reached out to your Ben admin system, maybe your payroll provider. A lot of things went wrong last year. We dealt with, because this data, we're not used to this kind of reporting. And there was not one single entity that held all of the data that was needed. So we're pulling some of the information from a Ben admin system. We would get some of it from the insurance carrier's report. Some of it, we're lacking this. We don't know if we're meeting rate of pay for affordability safe harbor. Let's go grab that from the payroll report. And then some employers had been tracking it internally on an Excel sheet. But making sure that this data is correct is going to be so critical for this year. Because I remember sitting in our office after Christmas, December 28th last year. You've never seen a happier person in your life when I got the email that we had 60 to 90 extra days to file these forms. It was much needed last year. We don't have that last year. So the data has to be complete. We have to have all of the data as of December 31st, and then you literally have until the end of January to get the forms out the door and to get this filed with the IRS. So you have a much shorter window this year. So I would imagine that most of you, if you haven't already, check with your Ben admin system. Make sure that you're going to be able to pull this data in some sort of format that's easily transmitted and put on that 1095-C so you're not struggling with it. But those are questions you need to be asking. Who's doing what? Okay, again, when are the forms due? Well, we don't have the time frame that we had last year, which is unfortunate. It would be great if we had that extra time. But the 1095-C document must be furnished to each employee by mail unless they have you have an affirmative consent to receive electronically by January 31st for the prior year's reporting. So remember, we're reporting on 2016 calendar year. We're reporting in 2017. So those forms need to be out the door by January 31st. Now, the 1094-C filing is due to the IRS by March 31st for the previous year's information if filing electronically, February 28th if you're filing on paper. And here's what I said last year. If I have to have all of the 1095-Cs done I'm going to have the information for the 1094-C. So why give us an extra 60 days to file the 1094 when I have to create the 1095s? I'll already have the 1094. I think the thing here is that because we don't have good faith effort this year, if you send out your 1095-C documents and you get some of them back, hey, this is not correct, I was really covered all year long, you showed me as only having coverage for 2 months out of the year, my address is incorrect, you have my spouse's social security number incorrect, you have time to make those corrections and send out a new form to the individual before actually filing with the IRS. Okay, and again, we do not anticipate another delay for the 2016 reporting, so it's time to get ready. Extensions, reporting entities can get an automatic 30-day extension of time to file by completing and filing the Form 8809. The application for extension of time to file information returns by the due date of the returns. This extension, though, is only for the 1094. It is not an extension for the 1095-Cs, the information statements to go out. If you need an extension for that, you have to file a different form. I don't have it on here, and it's not an automatic extension. You're going to have to file with the IRS and give them probably a really good reason why you are not prepared to have the 1095-C information statements out the door by January 31st. But if you know that that's not going to happen, there's no way you could pull the data together, something's going on, as soon as possible, you need to file an extension. And again, if you need more information on that, you're certainly welcome to send me an email. I probably need to speed up just a little bit here. Transition relief for 2016. It can occur under certain conditions. One, that the employer has not modified their plan year after February 9th, 2014. The employer did not reduce your workforce to comply. So you didn't have 102 employees and all of a sudden you were 98, so you could fall into one of these categories. And you also have to have a non-calendar year plan. Now, how it applies, if you're 50 to 99 full-time employees, you are shielded from the employer mandate penalties for 2015 plan months that fall into 2016. So if you had a June 1 to May 30th plan year, those months in 2016 that carry over from the 2015 plan year, you would be shielded from the employer mandate. If you are 100 plus, the threshold for offer penalty is lower. Remember, you only had to offer to 70% of your employees for 2015, and it's a 95% offer in 2016. So again, if you had a non-calendar year plan for the months of the 2015 plan year that fall into 2016, you only have to meet the 70% offer. For the remaining months, you would be subject to the 95% offer. I want to talk about the 95% offer a little bit more in detail, but keep in mind also, note what I put in the middle there. There is no transition relief from reporting. A lot of people thought this last year. They felt if they fell into the transition relief for the offer of coverage, then there also was no reporting requirement. That is not the case. There has never been any transition relief from reporting. Even if you were not subject to the offers of coverage, you were utilizing some transition relief there, you still had to report that on the forms, and there were certain codes that would tell the IRS, we're reporting, we're not offering coverage, but here's why we're taking advantage of some of the transition relief afforded to us. Okay, so what lessons did we learn for 2015? I'm going to speed myself up here a little bit. Number one, get a jump start on your data collections. Can't stress that enough. I know I've talked about it a lot already. Your forms and filings are due 2 to 3 months earlier than last year. Understand who needs a form. If you're self-insured, you've got COBRA people that will need a form. Part-time people, are you offering coverage? If you're not offering them coverage and they meet under certain hours, they don't need a form. So understand who needs to get a form and who does not need to get a form. Validate and review before filing. So you want to make sure that December 31st you have your data ready to go wherever it's going to go, whoever's going to be doing your reporting for you, and give them plenty of time to create those reports and send them back to you so that you can review them, because again, no more good faith effort, they have to be correct. And do not surprise your employees. Communication is everything. Prepare for corrections. I mentioned this earlier. Out of 10,000 forms, just about 1,000 of them came back rejected. So you have to have a process in place for how you're going to rectify that. The IRS has a three-pronged process. 1, checking your own records. 2, checking with the individual. 3, sending that individual to the Social Security Administration office to see what's up, what is incorrect. Key changes, the MEC coverage penalty. This year, one of the key changes, one of the most important changes here is you have to offer that coverage to 95% of your full-time employees. Last year it was 70%. So if you're an employer that has a lot of variable hour employees, hopefully you already have a mechanism in place for tracking those variable hour employees and understanding exactly when they need to be made an offer of coverage, because you only have 5% there to deal with. So 95% offer, probably the most significant change. The penalty for not offering minimum essential coverage is $21.60 times the number of full-time employees that you have. You could subtract 80 individuals last year. This year it's 30. So if you had 100 people and you didn't offer minimum essential coverage, you would take your 100 minus the 30 and calculate the 70 times 2,160. Okay. The last line there is just if you were part of an aggregate group, that 30-person deduction must be spread ratably among all employers. So if you had that 3 aggregated groups together, you would take that 30 that you get to subtract and prorate it a month. So you would each get 30 to deduct. It doesn't all go to one employer, one part of the aggregated group. The tag hammer penalty, the employer offers health insurance coverage, but it does not meet affordability or does not meet minimum value. Affordability, the cost of coverage is no more than 9.66 of household income. Minimum value covers at least 60% of the actuarial value of health costs. And so you didn't offer, you offered minimum essential coverage, but it did not meet minimum value. It was not affordable, and one of the individuals within your group went to the subsidy, got a policy, and received a tax credit or a subsidy through the exchange. The penalty there is the lesser of the 2160 times total number of full-time employees minus 30, or the 3,240 times the number of full-time employees who received a tax credit or subsidy. For some employers, this is worth it. We have some employer groups that are offering a basic minimum essential coverage only plan. That gets them out of the penalty A. And some of those individuals are still going to go to the exchange. They're still going to get a subsidy, but 3,240 times maybe the 5 that went to the exchange and received a subsidy is a lot less than the 2160 times every full-time employee. So those are strategies you might want to think about with your benefit strategist as whether that's something that might be available to you. Key changes, employer mandate, 2015 organizations with 100 or more full-time employees had to offer to at least 70%. 2016, you now have to offer it to 95%. The affordability safe harbor last year for the federal poverty level was at 9.5%, which equated to $93.18 for 2016. For inflation, it's gone up to 9.66%, and that equates to $95.63. These two I'm not going to go over in detail, this page and the next page. These are your Series 1 codes. The only thing that's really different in there is 1J and 1K. We have a lot of employers now that are doing this where they're making a conditional offer. There is a conditional, providing the minimum essential coverage to the individual, but it's conditional to the spouse or to the dependents. Depending on maybe the spouse, if they have coverage available through their employer, then it's not available to them under the employer's plan. So if you have any kind of conditional offer, you want to make sure that whoever's doing your forms for, preparing your forms for you, understand who those individuals are. I can tell you what we did not get in the Series 2, which I know I was hoping for, was a waiver code. Wouldn't it be nice if they just said this person waived coverage and that was coverage or code series 2W? It would have been so easy. We did not get that. So these codes didn't change a whole lot. If someone waives coverage, you're still depending on whatever affordability safe harbor you're using. So if you're using the federal poverty level and I worked for you and I waived your coverage, I would show up as a 2G. So no waiver coverage code. Would have been nice. The penalties for failure to file your forms have gone up to $260 for each return for the 2016 plan year. And keep in mind that there are two forms that you're filing or not filing. It's $260 for the form that the individual should have received, and it's also $260 for the form that the IRS should have received. So you need to be filing your forms, and you need to make sure they're correct. Penalty is the same for not providing a correct payee statement. So if someone received their 1095-C and came back to you and said this is incorrect, you have a duty to provide that individual with a corrected form. And keep in mind that the above penalties double if the applicable large employer is found to be late or providing incorrect information on the 1095-C due to willful neglect. So if the forms are incorrect, have a good reason for it. And a lot of times there is a valid reason for it, but not filing because you just didn't want to do it, didn't think the IRS was going to catch you, is going to be willful neglect. And the penalties can be quite stiff. So, okay, communicate. Communicating with your HR department, communicating with your payroll department. I'm sure everybody can appreciate this slide right here. Trying to get the information and pull it together, making sure your employees understand what these information statements are, what they're for, what the purpose, what to do with them is critical. Okay. Real quick on Brinson reporting tools, it's a matter of pulling the employer information, making sure the employees are classified correctly, uploading that information into the system with the employer census, dependent census if the group is self-funded, creating a summary report, reviewing it, making sure it's all correct, and then generating the 1094, 1095-Cs, e-filing them, and printing and mailing. Doesn't that last slide just make it all seem so easy? And with that, I'm going to turn it back to Scott for just a few minutes. Scott, if you're there.
I'm here.
Okay, I'll let you talk about Cornwall Jackson for just a few minutes.
Great. Thank you so much, Sharon.
Mm-hmm.
You're such an expert. It's great to know you're a resource to our firm as well as our clients and friends and family. We appreciate that. So we got 3 more slides here. Just a little bit about Cornwall Jackson. We do offer outsourced accounting services, which not only includes traditional bookkeeping services, but also includes helping lead our clients into the cloud to leverage paperless automation to drive efficiencies. And then on the next slide, and so you can go over this, and it talks a little bit more about our outsourced accounting services. And then this is a slide about our payroll services, which is just a natural extension of our outsourced accounting services. A lot of times being involved with our clients, taking phone calls from Paychex and ADP to answer questions they can't answer. This became a natural extension to continue to do more for our clients. And then on the next slide, this talks a little bit about our tax compliance, tax planning and tax compliance. A lot of people on this call are existing clients, so they're familiar with some of this stuff. But just being involved in the numbers on outsourced accounting, from an outsourced accounting standpoint, we feel that being involved in the numbers generates better tax planning and compliance results. So that's it on my commercial. So I guess we'll go to the next slide. I think we can wrap it up.
Thank you, Scott. And again, thank you, everybody. We appreciate you taking time to attend the webinar today. And as promised at the beginning of the webinar, we're going to send you a white paper that we worked together jointly on, Cornwall Jackson and Brinson Benefits, a copy of the presentation, question and answers. I haven't even looked to see if any have come in, but I did a pretty good job of using up all of my time. There is a recording of this webinar if you would like to have that, and we'll be sending all of that out to you, everybody, in the next couple of days. And again, thank you for attending. We appreciate it. Scott, thank you. Everybody have a wonderful afternoon, and Go stand in line somewhere and vote. Thank you.